Good afternoon, everybody. Good afternoon. If you could give me a quick sound check, please, guys, that would be great. And then we can get rocking and rolling. Excuse me. Loud and clear. That's great. That's what we like. Good afternoon, James. Good afternoon, Michael. Good afternoon, Luke. And good afternoon, TJ. Good to see you guys. And welcome to everyone else who's going to be here in a minute or alternatively watching and catching up later. So, I hope you had a good weekend, folks. Good weekend. Working and chilling. Good, good. Yeah, exhausted from it. Yeah, that's the one. I tell you, I mean, I had a great weekend, but I'm pretty tired as well. Yeah, pretty tired from it. Actually, treated myself to a few beers. 604 days without alcohol before that. Bloody hell. Jeez, man. 604 days. That's amazing, mate. Well done. I did not know you were doing anything like that. I hope I'm saying well done for the right reasons here. I hope I'm not condoning condoning some amazing effort in not drinking alcohol and you cracked, and I'm saying well done. Hopefully it was a self imposed thing. Good. I don't alcoholism is obviously a dreadful affliction. So definitely not promoting that. But yeah, no, that's amazing, man. Yeah, 604 days. That's what 200. Yeah, just under 2 years. But yeah, that's yeah, man, that is really good. I don't think I've ever been. I don't think I've ever been that long without alcohol. But then again, I don't drink much. The odd occasion here and there, I'll get silly. But I mean, it really is the odd occasion. Probably. Yeah, I just don't end up drinking much. Just yeah, I did. I used to. I used to drink all the time. City was my city life was a blur, to be honest. But yeah, not anymore. I think it's an age thing, isn't it? When you're young, you're sort of working and partying at the same time, 24 hours a day, 7 days a week, sort of thing. But then you kind of yeah, it's just you just grow out of it. I think priorities change. I think the hangovers as well. Hangovers now last me for about 3 or 4 days, whereas I used to just not be hungover. I just used to be able to drink and then, I was fine, whatever. But I think as soon as I was feeling like still sort of really out of sorts and stuff, and not happy on the third day after, I think that's the sign, isn't it? That's the sign. Yeah, yeah, definitely. That's it. All right, guys. And we got Scotty D in the room. Good afternoon, Scotty D. I appreciate you might be at work at the moment, mate, but a little round of applause for Scotty D today for managing to achieve something pretty damn good over the weekend for a great cause. If you didn't catch up on the chat today for whatever reason, Scotty did a charity bike ride from London to Brighton for Cancer Research UK. Absolutely fantastic cause, and Scotty, if nobody knows, doesn't cycle really, as far as I'm aware. Don't think he's too much of a cyclist, and it was a 55-mile ride. So I mean, it's no small feat. Next year we'll see him in the Tour to England. No, it's very impressive. Very good. Very good. Very good stuff. All right. Let's have a crackerjack of what's going on then this week. So, first of all, we're going to start with the fundamentals, and we generally do start with the fundamentals on a Monday afternoon, but yeah, I don't know what's going on with my economic calendar. Is that even right? I mean, hang on a minute, hang on a second. I've got to have a quick check of this because I just got a really bad feeling that something's going on with my calendar on TradingView. And this week we're going to look at no nonsense news. Oh, is it stuck on US? Is it? All right, that'll be the thing then. Hang on a minute. I don't know why. I don't know what's going on with this stuff. I swear to God, I don't even have the US usually applied. So I have no idea why that is. I have no idea why that was stuck on there. Thanks, mate. See, it's great someone's got their head screwed on tightly. It's that bloody bike ride. Yeah, it's giving him a sharp mind. That's what's happened. Great. Now I'm stuck on this stupid page. Right, yeah. Okay, thank you. So, all in all then, looking at what's coming up, it's a relatively quiet week, I would say. Not in terms of the fact that, obviously we have a couple of interest rate decisions and the pound CPI. But that's like, kind of pretty much it. So, for example, today we've got nothing. Tomorrow we've got the Canadian CPI inflation rate. And then Wednesday we have the Fed and we have the pound CPI. But the thing is with the pound CPI is that takes place at 7 a.m. and it never really moves the market too much, to be honest. So, I mean, the entire world knows that we're one of the worst performing G8 countries. So, it's not really going to come as a surprise. I mean, we're looking at the sort of core CPI pretty much remaining the same at the moment at 2.2%, and I don't see any reason for that to change. In fact, we may even see inflation actually start peaking a little bit, maybe coming up to 2.3. I genuinely wouldn't be surprised if that was the case. We do have the BOE interest rate decision, which is, for me, I think, probably quite an important factor this week because there was a real imbalance of sentiment versus with the interest rates either seeing a 25 basis point cut or remaining the same. We've seen the market sentiment really dip down to we definitely are not going to see a 25 basis point cut and then rise to like 75% saying we are going to see a 25 basis point cut. And now we're at 50-50. It's been a real battle of, a sort of real game of tug of war at this stage between, 25 basis point versus not 25 basis point. So it's going to be an interesting one. Obviously, the analysts' expectations are now sitting at 5%. I don't see why they would reduce rates again at this stage. Probably going to be waiting until November, December, end of the year now before we see another 25 basis point cut because they need more evidence. The thing is, the inflation metrics at the moment are remaining quite sticky. Some of them are near on target, but we've got other problems. We've got, huge problems in the UK at the moment. So it's a real battle for Gov Bailey as well to determine, what the best course of action really is with the BOE right now. Whether lower interest rates are the right thing for the people. Is it going to be a bad thing for inflation? Is inflation going to rise again so quickly? It's just a shit show. It really is. But it'll be interesting anyway. And in terms of market impact this week from the BOE, I think the pound probably will have a bit of a jump. I don't think the UK FTSE is going to be affected whatsoever. So that's pretty much taken that off the table for any potential trading opportunities. And we'll have to wait and see what the pound has to say as a result. It's called Labour. Yeah. Yeah, that's it. So tallying back then to Wednesday, we have the Fed interest rate decision. We are looking at another 25 basis point cut from the Fed. And I think that's probably likely. I really do think that's, I think that's a good expectation to have. I mean, generally speaking, when the analysts, come out with these forecasts, they're not really wrong, often. Yeah, okay, there is the odd outlier, but generally speaking, if they're saying 25 basis point cut, they're taking that straight from the Fed Watch tool because it is, in the market. That's the market. That's the market sentiment, and generally speaking, it is when it comes to an interest rate decision, it is generally correct. So I do think that's going to be the one. But the press conference, it's on Wednesday, isn't it? It's a bit bad timing for me, obviously with family life. But I might try and actually do this week's Fed press conference and stream it live. So stay tuned for that one. And it might be a 2-session day where I come on for a short period of time in the afternoon in, sort of 15-20 minutes, give you guys an update on the American markets, and then we'll hit the Fed press conference later on in the evening and do a bit of live trading as well, I think, in that one, which would be good, a bit good fun. But I think it's a big one for the US. Obviously, the US is actually seen some real significant cooling off in their economy in the short term. The monthly data is changing swiftly, whereas the annual data is not changing as much as they'd like. Inflation is very, very sticky in the US at the moment, but they have deemed it worthy enough of dropping their interest rates down. And I think that's reasonable based on the cooling off of the data. The monthly data is, generally speaking, a good forward indicator for the annual data. And so they're probably looking at all those metrics themselves and thinking to themselves, if we keep 5.5 at this rate, we're probably going to be looking at a recession faster than not. So let's try and get those interest rates down and see where that goes. So that was going to be an interesting one as well. In terms of the afternoon on Wednesday, we only have building permits, which is anything worth talking about. Building permits at the moment at 1.41 million, and that's up from a 406. But let's be fair, guys. I mean, we're talking about 400,000 difference there, so that's really not that much. So I don't think that's going to be too much of a market breaker. The US Dow Jones is the market to look out for when it comes to building permits. So that's the one that will have the most significant market impact if you're interested. And then, of course, jumping forwards over Thursday to Friday, we have the BOJ interest rate decision, which obviously we won't take any interest in. They are looking at keeping their rates the same way at 0.25% because that's just what they do. They don't have the opportunity of moving their interest rates whatsoever. So no surprise to the market. The yen itself, I would seriously be incredibly surprised if there was any kind of movement from the Japanese yen based on that news whatsoever. Obviously, I'm proven wrong a lot of the time in the markets, but in this particular one, I do not expect the yen to move a muscle as a result of that. And then to tie up Friday's major news, we have the retail sales data at 7 a.m. So Friday's day is going to be really, really slow. And a slow way to tie up the week. But look, we've got some economic sort of drivers pushing the market on this week. We have the ZEW Economic Sentiment Index as well, a 17.1 reduction from 19.2. Just for those of you who do not understand the ZEW, that's actually a really significant drop. And if it does come at a 17.1 or even lower, that's bad news for Germany, which is obviously going to have an impact on something like the DAX, for example. And then, of course, we have the intermittent CPIs. We've got Canadian dollar, we got pound CPIs kind of driving things forward. But the real highlight this week is going to be that Fed and the BOE events on the on the Wednesday evening and the Thursday afternoon. They are what we really are going to be keeping our attention focused on this week for those driving factors. So I'll have a quick look at the DXY as well. DXY at the moment has been ranging down here for a while on top of big daily liquidity. So this is almost like a floor in the market here. It depends how wide you want to draw the zone. Ultimately, this is a daily chart, and don't forget I've got my chart scrunched up. So if we have it normal and we've got our sort of nice floor here, that's the kind of thing that I'd be I sort of analyze on the perspective of the daily time frame. We had a fake out. We very quickly came back above, break, close, retest, and then went up this huge rally. That is a very stereotypical fake out there. At the moment, we do have this kind of, it is an M. Don't get me wrong, but it's not confirmed, right? Because the only way this M is going to be confirmed is if we get the break, close, retest to the midpoint and the continuation, which means then, well, I mean, that would be the first time in a long time we've seen that, because apart from this fake out, I mean, we were trading up to this level here, which is back in 2022. Okay, so this is actually no small detail at all. This is a really big deal where this US dollar is trading at the moment, and we're failing to make any significant higher highs up here. So things are certainly priming themselves for something. We're either going to get the sort of buyback and the volatility back up to around 104, 105. Even, possibly the previous highs, 106. Or, alternatively, we are going to start the directional change in the trend. The US dollar, if we look at the weekly time frame, US dollar has been rallying for a long time. If we look at this. So, we've got these nice areas of liquidity the whole way up. This is the one here. So make no mistake, guys, this is a really significant area. Really significant. So, and we've been resting on top of it for a long time, and we've been sort of grinding along sideways since 2023 here, and that was January. Okay, so the entirety of 2023 and the entirety of 2024 so far. We're now in the third quarter, coming up to the end of the third quarter, really, or the second half at least of the of Q3 of 2024, heading into the end of the year. So long time spent here. We could very soon be looking at a decline in the US dollar, with the decline of its interest rates all the way back down to around 92.67, possibly even lower. Right, so really big sell-off. And then what will that look like against something like the Japanese yen, for example? Where are we? USD yen. So USD yen has been trading up. It's 161, for example. This could be trading easily back down. I would say it's sort of 124. Obviously, this is the weekly chart, and that's a smaller distance than the dollar. But we're looking at a very weak currency it's trading against at the moment. Japanese yen. Sorry, it's incredibly weak. So we could be looking at sort of 124 to 126. This area of liquidity in here for the USD yen, which we've already made pretty good progress so far to that end. So that's another one to watch out for. Anyway, very big decision point here for the United States dollar. So we'll have to wait and see what takes place over the course of the next, I'd say month. I'd say probably wait another 4 weeks. See where it's at. Okay. So, starting from the top of the list, as it has naturally fallen into, we probably won't get through all of the Forex asset class before we have to hit the stocks, but we'll get to probably around the Euro USD or pound against the Oz, and then decide to do the switch over to the stocks. So we'll see how far we get and go from there. So completely fresh this week, all pendings cleared and all the charts cleared and everything, so we can hit this off with a fresh pair of eyes. Best way to do things, keep ourselves on our toes. I think looking at UK Brent at the moment, we are trading away from some big areas of liquidity. Could be a break, close, and a retest, depending on what way you look at it. But for me, not. So I'd be looking at something like that, for example, as my reference point. Actually, unbelievably, it looks quite like the DXY. No surprise there, I suppose. But at this rate, yeah, really nice bounce out of liquidity here. And we've got a really nice point of interest in here. And so this then becomes our fresh trading margin between these 2 points, which is definitely nice for the 15-minute time frame. So oil has been incredibly volatile, very, very choppy market. So you will have to find, where it looks best for the actual trading margin. Now, for me, there's a couple of opportunities. I mean, the first one, we cannot dismiss the fact that oil at this stage right now looks like a good trade. I mean, this is your clear access point to the position, right? So that actually doesn't look too bad at all. Where price is literally trading right now is a really nice entry point. And I'd be looking at maybe a 1 to 2.5 for that one. So something like that, for example, would be really nice, oil long. The other opportunity that I'm thinking is clearing out the high and then going at the second half of the move. I'm not really a fan of doing this necessarily, but there is that option. So let me just go there. Entry point, target profit, and your stop loss, which is going to be about here, maybe. Yeah. So your second trade idea is a 1 to 2.3, and your first trade idea is a 1 to 2.5. I don't think any of them carry any more or less inherent risk. They just simply are what they are. I think to getting down at these lows is probably, I personally feel, is a bit of a better option. We've got an anchor point in there, and we also have the anchor point that runs across the floor here. Now, to get that bottom one, you're going to turn that trade into a 1 to 9, a 1 to 1.9. There's nothing wrong with that necessarily, but I would much rather say, okay, well, I'd rather have that there and this here, and go for that 1 to 2.3 and half the time. But it's not really the kind of trade idea that I'm aiming for oil. I want to be in it for a while. So yeah, I'm going to say that's I'm probably going to say like that. That's going to be the fixed trade. So 1 to 2.66, looking at a 0.6% return, 0.6 plus % return on that one, and I'll be happy with it. So I think what you guys should do, if you are interested, decide on which trade you want to go for, and as soon as you're ready, either put a pending in or market order for this one. Excuse me. Right, let's move on. Okay, next up, gold. Gold's high of 25.89 is just unbelievable, man. It really is. We got that breaker structure from the range at 25.28, and it's just not stopped. It really has not had a solid price action pullback yet. Obviously, with the United States dollar, if the DXY is going to continue trading lower, then gold is going to reach my long-term forecast before long. It's not even going to take it that long. We come down to around this area, sort of 90-ish down here, gold is going to surge, and it will probably happen quite quickly as well. So US dollar at the moment, on the 4-hour chart at least, is having a bit of a bounce. We are coming into some previous lows here as well, so I don't really find that too surprising based on where gold is at the moment. I just feel like this is too high risk to consider buying into at this level. It needs to pull back. I mean, for me, it really does. Because of where it's trading at the moment. I mean, if we look at the highs of this move here, which is where we've been trading sort of between for a while now, look at the margin we have to trade between these two areas. I'm not even looking for a trade idea back down to 25.33. I'm not interested in that anymore. But to have a decent price action pullback at the very least is what I'm looking for. So possibly looking to take the trade for a breaker structure below this area here, and then down to like this area in here, for example. That would be even good enough for me, so that we would have fallen from the very high, down at around 1.3%, and then it can continue its job to the upside. I don't care. That's good enough. But I cannot fathom going long gold without the pullback on a breaker structure at 25.90. So for me, it is a short between these two areas. And then after that, a trend continuation trade. Looking at 1 to 2 fixed returns, basically, as far as we can go. So Aussie CAD. Aussie CAD's been going for an absolute surge recently. We've got a slight descending level, actually. I was going to put liquidity in there, but no need yet. What do I like? Do I not like that? No, not really. No, I don't like that, actually. So, Aussie CAD. What do I want to do with it, guys? What do I want to do with this one? I mean, the floor's down here, 91.22. I'm not liking it. I'm not. It's a beautiful rally it's having. But it needs to come up to here for me to get some selling interest. And it needs to come down here to get any buying interest. So right now, this is not a contender for me. I mean, that's the nice point. So this around here is just complete and utter mess. And then we get the break close retest just to confirm. So that's really nice. This grinding along the top here, position building up for a short. And then grinding along the bottom here, and then the position grinding for a long. So yeah. Yeah, so it's had a good run. It's had a good run. But it's dead space trading at the moment. I'll wait for 91.80 for the short or 91.30 for the long. And that's fine. Also, with these margins, I'm not going to necessarily be using this for the target profit. So put an alarm in, up at this area, if it hits it, then we can talk about where to take the trade to. Because for me, even though, don't get me wrong, there's some beautiful trading margins here, easily accessible by the Aussie CAD, but I might not do that. So I'm going to put an alarm in there, and then we can take it from there. Aussie against the yen. Nah, I'm not liking that. No, that looks awful. Let's wait for Monday to get out of the way. Aussie NZD. No, that looks absolutely crap as well, to be honest. Yeah. No, wait for Monday to get out of the way. Aussie dollar. Possible rejection from this area in here. Does it have the steam, mind you, to come all the way back down to here? That's the question, isn't it? That's the one. They're the trading margins for sure. There's no doubt about that, but does it have the steam to do it? Okay, so there is trades. There is trade idea in here. So that's there, isn't it? Yeah. So break a structure for a long. Whoops. Break a structure for a long is going to be here. Okay, so you can put a pending order in for this one. And honestly, you don't. I'm not even going to look to take it to the liquidity level above. I'm actually going to look for this area in here. So that's going to be the trading margin, not this, but this. So break a structure trade, entry, target, stop loss, 50% point. A little bit of a better margin on that one. There you go, 50%. Yeah, that's fine. So I wanted 2.4 then on that one. And for the short, yeah, that's the one. So for the short, I'm going to be looking at this. Right, so the reason I'm going to be looking at that, inflection point, rebound, retest on the way up. Okay, so that makes sense. And then I'll be looking at taking the trade idea. I mean, this is caution trading, right? You can see it. You can see it in the analysis. This is definitely someone who is sort of treating the market with a little bit more caution than he possibly usually would. And there is a reason for that. So that's how I would handle the Aussie dollar at the moment. CAD Swiss. Yeah, that went for a really, really nice sell-off. Reached possible floor, not the floor, but a possible floor in there. Looking for the potential bounce. So we got this big area down here. We've also got a smaller level of liquidity at around 61.50. So that one is about here. And we have this area here, this inflection point, as your structural breakout for the short. So now your trading margin is complete. So you'll be looking to take the trade idea between the 61.90 and 61.60 areas. So then entry, that bit there, this bit in there. We're coming up with some pretty decent risk rewards, I have to say. On this general risk reward ratios have been really good. Of course, don't forget about the fact that we are trading on top of this area here as well, so we could potentially be looking at the long. So that long would take up to around there. I'm not a huge fan of the long though, guys, okay? Not hugely, because it is quite messy at the moment. That's why I'm going for these much shorter targets than I usually would. Because the week has opened up actually with quite a few roadblocks and stuff, so I mean, even this area here, for example, I'm not really happy with that, so I'm probably going to put that about there. So that's going to be my breaker structure area for this trade. So this is going to be a very, very short-term trade. Target is going to be the belly of the zone above. Entry point there. And the stop loss at around that point there, at around 50% between the two zones from 1 to 1.94. Right, what time is it? 2:05. CAD yen. Let's have a look at the daily. Kind of trading in the middle of nowhere. Point of liquidity. Well, I guess it is the top of a point of liquidity, isn't it? Yeah, so I won't dismiss that. We have the area up here above. Let's have a look at the 15. Nah, scrap it, guys. Euro against the Oz. No, scrap. Euro against the yen. Possibility to the previous highs. There you go. That's a nice trade. So, level in there. Level in here. Whoops. There we go. Level in there, level in there. And then we have the breaker structure area, which is situated in here. Now, this breaker structure is a bit scrappy just because I've copy and pasted the zone, but it looks like that. right? So that's a trade. So we're going to go long the euro yen, entry point, target, and stop loss. Yeah, 1 or 2. Yep, there was the opportunity earlier on for the EJ, so that's good, James. If you're seeing that and you're in it, that's good stuff, buddy. But there is a 1 to 2 there for us latecomers as well. Euro NZD. Yeah, so I like the Euro NZD's range. It's not, what the hell? It's not too bad, this range here. We were looking at this one last week as well. So, Jesus, come on. Yeah, so that's quite nice. 1, 2, 3, 1, 2, 3 down. Well, more than that, to be honest, down to the lows. But we can't trade this one yet. So what we're going to be doing is waiting for the market to come up to one of the high or lows. I think I might be mouse running out of batteries or something. So yeah, we are going to look at the continuation here. So sell side, buy side, sell side, buy side. At the moment, we're not looking at anything. And finally, the Euro USD. Luke's wife. So, Euro USD at the moment, we've got this area up here. Relatively decent inflection point. Not huge, but, you know, it's okay. I mean, honestly, guys, the one on the 15-minute time frame is so far down. It's really not going to be wise to be looking at the entirety of the margin between here the trade. So we're going to have to break this down. So we do have the capacity to trade possibly like down to this, for example. See this double top here, and then it has that retest. So that's not actually too bad. And then if we look at the breaker structure point, that's going to be at this point here. And now we've made a nice little trading margin. I mean, this realistically could be done and dusted in the space of 15 minutes. You know, looking at that there, entry point here, and then you're going to have your stop loss. You know, sort of. Personally, I would have it above this area in there. So then, yeah, you're probably looking at around a 1 to 2 on that one as well. So that's not too bad as well, actually, guys. To be honest with you, that euro dollar trade, that's actually okay. It's not perfect, but it's all right. Right, what are we on? 10 past 2. Let's get going. We'll stop at the Euro USD. We'll save this for tomorrow. So, US trades this afternoon then. James says the US 30 is the only one to look out for because the NAS is nasty. Nasty NAS. We'll have a look at the nasty NAS. So, the nasty NAS is... Yeah, I don't think the NAS is actually that nasty. Personally, my humble opinion. I would be liking an area like this, for example. So, really nice inflection point here. Really nice retest inflection point here. Haven't necessarily had a retest of the level now. So, we're sort of waiting out for this one. So, we've got a nice series of inflection points above. We haven't actually hit that one yet. That's the unfortunate thing about the NAS. I don't think it's too nasty. Just look at it like this. But we haven't hit this area. We haven't hit that area. And now we're trading in the middle of things. So, to get that continuation to the upside, we'll be looking for this area this afternoon, being the breaker structure. So, once we break out up above this area to a new high, I would expect the market not to stop at this area, which is the TRF, but to rally right the way up to 1960. So if you do want to take a long, break a structure, target profit, and your stop loss, nice and tightly behind the price action on that one. So maybe a 1 to 2.83 on that, just in the nature of it being a market open and the fact that the breaker structure area is actually there. So your stop loss is actually circumferencing 2 levels of liquidity in that setup. If you're taking a short, then you're going to be out of action. There's no shorts to be had. But there is definitely that long. Now, if we're looking at the Dow Jones, complete opposite end of the spectrum, all we see really are shorts. So it's trading up against this really nice point of liquidity up here. We check out the daily time frame. You can see that, in fact, we are trading at the all-time highs. Last time we were trading at the all-time high, we saw quite a nice sell-off as a result. So this is all starting to look pretty good for potential price action rejections from this area. Now, the short target is going to be, I would say, this area in here, for example. This is going to be a trading margin. Breaker structure point is going to be at this area in here. And then you're going to look at entry, target, stop loss for a 1 to 2.23. And then if the market comes down to this area and you start to see a rejection of it, then you're going to buy it back. So buy back from this area of liquidity. And again, you're not going to be looking to take it to this area. You are going to be taking it to the major destination of liquidity up at the top there. So there is your TP. There is your stop loss. And I mean, that one's looking at a 1 to 3. Okay, so that's no joke, that trade idea. That's a really big one. Of course, if we break down lower, then you're going to be looking to take it to this area in here as your target. And then you're going to look at the breaker structure at that one above. So breakout, target. The stop loss for this one, if you're confused about where to put that, that's going to be at there. Okay, so you're always looking for your levels of liquidity first. You don't care where the stop's going to go. You just look at where that liquidity is. So the liquidity's there. And so therefore your stop loss is going to be about there. And so therefore you've now built yourself a 1 to 2, maybe a 1 to 2.1 or something trade idea on the short side. So US30 Dow Jones is looking really nice. Lots of trade ideas. We do have the access for a long here. Ultimately, though, we are trading at this area at the moment, so I'm not going to trade any longs from the market open itself. I'll only trade shorts from the open itself. I'll only trade longs this afternoon after the buybacks take place, if they do. But if you're long from the market breakout, then the NAS 100 is the one to go for its 1 to 2.8, which is also a really, really nice, healthy risk reward. All right, so it's 2:15. I'm going to wrap things up there unless anyone has any questions. Now is your time to ask. If you don't, then I'm going to wish you a fantastic US Open this afternoon. Plug in your pendings, get ready for it. I reckon it's going to be a relatively slow day given it's a Monday, but who knows, we may end up with something a little bit tasty to get ourselves off with a bang. Anyone got any questions then? Anything out there? Or is everyone clear on the plan? Okay. Well, I'm going to take that as a clear on the plan then, guys. Have a great day today. Take care of yourselves out there. Have a good one. And trade safe. I will see you later on in the room. Cheers, folks.